Hey everybody, hey traders, Chris Pulver here. Welcome back to another installment of my Keep It Seriously Simple video series where I'm providing my best trading strategies in any financial market and helping traders of all ability levels trade to be more consistently profitable. This video is basically a 15-minute crash course on trading psychology and improving the trading mindset. Now look, it may not sound like the most glamorous subject, but it's probably the biggest differentiator between traders that are successful and traders that are not. So in fact, I was actually listening to a video of myself that I did years and years ago. That was about an hour long where I was just kind of ranting about trading psychology, why it's so important. So I'm going to do it in a more concentrated fashion this go around, about 15 minutes of your time, and I think it can change your trading for the better. We will also be reviewing some very simple metrics like the relationship between risk and reward and using something like a profit calculator or a compound calculator to see where we're going to be as traders. So whether you're trading for passive income, full-time income, looking to become a full-time trader, or just wanting to get in the markets and be an investor, that is totally fine. I also want to go into some of my live accounts and show you how I'm managing some trades and positions. All right, so I will go ahead and get myself out of the way here and let's talk through this. Some of the big bullet points for today: setting proper expectations. I see that most traders from the very, very beginning, or just people in general that are like, I want to be a trader, I'm going to start investing, have no idea what they're getting themselves into. So setting proper expectations, I think, is critical. Future plans. What do you see yourself doing with trading and investing? Is it a short-term thing for right now because it's popular and it's fun to do? Is this something you see yourself doing to change your financial future? Is this something for, replacing income, making full-time income? I mean, having a vision for yourself in, if you put in the time and effort and get educated now, what does that look like 5 years from now? What does it look like 10 years from now? Education and training. Look, there are no barriers to entry for traders. If you think about it, if you wanted to be a doctor, a lawyer, an engineer, a pilot, you're talking about years and years of school, training, licensing, residency, right? Hours and hours of practice to become accredited, to become an expert, right? What do you do to trade? You contact a broker, you give them some money, and you tell them that your ability level is either beginner, intermediate, or advanced. They're not asking. If you're willing to put money in, you're a trader from day one. So when it comes to, the barriers to entry, anybody can be a trader. And that's not necessarily a good thing because you're going up against sophisticated markets. You're going up against the biggest and brightest and deepest pockets in the world, and it's you versus the markets. And at the end of the day, the market doesn't care. The market doesn't care how much money you make. The market doesn't care how much money you lose, right? And we've seen that recently. I mean, the stock market over the last several years, especially 2020 and this year, we're seeing small little traders, little retail traders that are making tons and tons of profits. Now, my concern is that those tons and tons of profits are not going to be protected. It's amazing to see that climb, but it's discouraging to see that making hundreds and hundreds of thousands of dollars or millions of dollars can easily disappear by making some fatal mistakes. So that education, that risk management is really important, which brings me to the next point: risk and survival. If I can help you understand that it is all about survival, and you can give yourself enough time and buy yourself enough time to stay in these financial markets for the next 6 months, 12 months, 3 years, 5 years, 10 years, you're going to see the markets do the same thing over and over. There will be nuances, there will be subtle differences, but for the most part, at the end of the day, financial markets do the same thing. They go up, they go down, they go sideways, they go fast, they go slow. That's it. Price patterns are price patterns. The language of the market's the same. We're understanding some type of sentiment. We're aware of what's happening geopolitically. All these things kind of create the picture, create the landscape that we trade. But when it comes to looking at a chart, evaluating a stock, the metrics are the same. Is it a strong company or is it not? Does it deserve to be at the price that it is or does it not? Okay, if it's a technical chart, is it a price pattern? But if we can trade it, we can see the market do the same thing over and over. We buy low, we sell high, have good risk management. That's trading. Okay, so let's go into expectations. Do you need to make money or do you want to make money? I think it's a very different thing that we have to answer. Like, you have to answer that question. Are you now deciding to trade, or have you been trading because you need to make money? Or is it because you have some extra savings, some extra capital, and you're willing to look at it like risk capital, and you want to let your money work for you? Okay, I think if you are a trader or becoming a trader that needs to make money, that's a lot of pressure. And as far as expectations, if your back is against the wall, that is a lot of pressure to deal with. And I'm not saying that it can't be done. A lot of people actually operate better and perform better when their back is against the wall, when they feel like they have no other options and there's a bit of desperation, right? You can't fail. You can't give up. That's fine. That's motivation. But if you need to make money, like I said earlier, these markets don't care whether you make a lot of money or lose a lot of money. So if you happen to be one of the victims of financial markets by making some very common mistakes, that pressure is a lot to deal with. Now, do you want to make money? I would say everybody says, of course. I'm going to trade. I'm going to start investing because I want to make money. Well, if you have a job, have a steady income, have some savings and risk capital, that pressure is off, right? I mean, for the most part, like, you have a side hustle. Like, investing and trading can be a very lucrative side hustle. Okay, so again, just putting it in perspective. If you need to make money, there is some desperation. I would say, still have a job, still have a career, and don't give that up until you are confident that your process in trading, until your investments are paying, incredible dividends where it can replace your full-time income, and you can focus more on that, and you can go through further education. You can enhance your strategies. But that pressure from the very beginning is really, really difficult. I see a lot of traders that come in with the best of intentions, with the expectation of I need to make money, and I think they put an incredible amount of pressure on themselves. And again, the pitfalls are there, the common mistakes happen, and those traders end up failing. And I don't want to see that happen to anybody. So proper expectations can be better. Performance timeline. How long are you willing to give yourself to trade? I know traders that come in and say, like, I have to make money. I have to do this within the next, 1 month. I have to do this within the next 3 to 6 months. I'm going to give myself 1 year to trade. Again, different timelines. Traders that come in, I need to make money and it has to be right now. It's a lot of pressure. The learning curve can be very steep and the market takes no prisoners. So again, just think about, like, logically, what's going to be the better path. The more kind of gentle learning curve of, like, I'm going to learn as I go. I'm going to get educated. I'm going to follow some good advice. I'm going to trade with other traders. I'm going to find a community. I mean, a nice gentle learning curve where you can learn as you go. You're not putting a tremendous amount of pressure on yourself. I think that is a pretty safe way to stay in the game and survive, right? And maybe that takes 6 months. Maybe that takes a couple of years. For me personally, my learning curve took a couple of years to really come into my own as a trader. Now, I was very fortunate. I learned financial markets and I learned technical analysis from a fund manager that was NFA, CFTC certified, managed about 10 to $11 million. And, small fund, but did very well, had an awesome work-life balance, and I was super envious. So fortunate to learn from somebody like this, to have some proper expectations set up front. But again, like, it certainly took me, all of a year or so to, like, come into my own, get comfortable with my strategy, but also be willing to expand, knowing that, like, I'm still going to keep my job. I'm still going to, build up my risk capital to have a decent amount that I can actually trade and work from and try to make a living with it. But I knew that it was important that I focused on the education in the process. Coming from a sports background, and being very competitive, I didn't want to give up. I know that even having some trials and tribulations at first and having some, successes and failures at first wasn't going to deter me. But I certainly didn't quit my job. I didn't, just put everything into, like, I have to figure this out and I have no time to do it. I mean, I had time. I had about 2 to 3 years expenses. I had about 3 years expenses actually saved up, where when I was going to go become a full-time trader, I knew that I was at least set for living expenses and getting by for at least a few years. Okay. So that to me, like, took the pressure off. I can focus on the big picture. I can focus on being profitable every month, focus on being profitable every year, and see where that gets me. And fortunately, like I said, a couple years is what was my learning curve. But I'm a big believer now, having the ability to teach traders and educating traders, that I think I can help traders accelerate that learning curve. But how do we accelerate it? Proper expectations go a long way. They really go a long way. So understanding that, this isn't going to be rags to riches. It's typically not. All right. If it is, awesome. But please understand that rags to riches should be protected. Because if you got there by doing, some pretty aggressively risky things, a lot of times that aggressive risk will bite you in the butt. And so I've seen traders have hundreds and hundreds of thousands of dollars in a very short amount of time and give it all back and then never recover, right? So, and again, mentally, that's a huge hurdle. Having all of these gains, it all goes away. So it's like, it's still something you have to establish a foundation to build on. Okay, let's move on. Next, we have future plans. How long are you going to trade? If you give yourself 5 years, you're gonna survive for 6 months, survive for a year, and you're going to start giving this a decent go. Where it starts out as dabbling, focus on education, focus on strategies, starting to invest a little bit more and more, becoming more serious about it. Okay, where do you see yourself in 5 years, 10 years? Are you looking at enough assets down the road to then think like, could I do this full time? Could I actually focus on just full time investing? I think right now, especially traders that are learning, it's all part time. I mean, we don't need to be in front of our computer 24 hours a day. If we are investing in stocks, if we're in cryptocurrencies, if we're in forex, we don't need to be in front of these markets. I know crypto is a 24-hour market. I know forex is a 24-hour market. Stocks, with extended hours, goes anywhere from 14 to 16 hours. Those are long trading days. I mean, the level of concentration is literally, minutes. I mean, you might give yourself 1 to 3 hours of full concentration. But after that, I mean, you have to have some other plan. So I'm certainly balancing day trading opportunities, short-term opportunities with the long-term horizon of I want to be profitable for the month, I want to be profitable for the year, and that's my focus every single year. All right, next we'll talk about education and training. Okay, look, like I said, the markets are going to do the same thing. There's going to be different market cycles. There's going to be different market sentiment. There's going to be all sorts of, geopolitical risks, good or bad, bullish or bear sentiment. Okay, but the markets are going to do the same thing over and over. The market's either going up, down, or sideways. It's going fast or slow. The market's either trending or it's range bound. So you know what successful traders do? They exploit what's consistent. And it doesn't have to be doing everything. You don't have to learn how to trade both ranges and trends. You don't have to learn how to trade, low volatility and high volatility. You don't have to learn how to scan every possible market for all these different scenarios. Like, just be good at one thing. But once you're great at one thing and you understand that that's what you're good at, that's what pays you, you will notice that things will change a little bit. Like, there are subtleties and nuances that you will have to pick up on. So we will constantly be evolving. We will constantly be learning, but everything just kind of fits within that framework of it's up, it's down, it's sideways, it's fast, it's slow, it's trending, or it's range bound. And in the peripheral, you're going to have your sentiment, bullish sentiment, bearish sentiment, risk on, risk off, and knowing the correlations out there where certain things happen with the dollar and stocks and commodities, risk appetite versus risk aversion. I mean, all these things kind of build the picture and build the narrative of where we trade and what kind of direction we trade for the path of least resistance, right? But we exploit these opportunities over and over and over again. I think that's really, really important to understand that you don't have to master everything. Successful traders that make a lot of money can do one thing great, right? But when you do that one thing great, it's going to require a lot of patience because you have to have the certain set of conditions, the certain parameters of the setup, and have it all come together. And it's still not going to always win. So you can have this edge, you can have this plan, and you're still going to take losses. And that's another thing, going back to expectations. Traders take losses. Professional traders, full-time traders take losses, but it's all a calculated risk. Okay, and I think that's the next slide. Hey, risk and survival. Like I said earlier, doctors, lawyers, pilots, engineers, any amount of school, licensing, residency, like years and years and years to say, I'm a doctor, I'm a lawyer. Traders, if you got some money, you can trade. So again, I think that traders from the very beginning are set up for high risk, not understanding the playing field, not understanding that it's a big bad world out there and you have no idea what you're actually doing. And it sucks because you're essentially getting set up for failure right up front. So change that. It's you versus the market. You can do one thing great. So focus on that education, focus on those strategies, and exploit those consistencies. Everything is a calculated risk. I want to talk to you about the loss of capital and risk reward. Here's actually a picture of it. I'll have this in the description for the video today. Take a look at this right here. This is a loss of capital compared to the percent that it takes to gain it back. So as an example, if you lose, let's say 20% of your position or 20% of your portfolio, look at what it takes to get it back, right? And this works the same way when we saw the financial markets in 2020 drop 40 to 50%, look at the recoveries that they had to make just to get back to break even. So when the Dow Jones, the S&P dropped 30%, they recovered 40+% to get back to those highs. And our portfolio works the same way. Us losing 50% of our account and 50% of our balance means we now have to make 100% in gains to get back to where we started. So what do I take away from this? What do I try to teach traders with this? That is, we try to keep our losses small. I think any trader can work within this 10% loss. If you can keep losses maximum, single digits, I'm talking less than 1%, single digits, if you trade and lose never, ever, ever more than 1% of a position, you can trade for years and years and years because there are tons of trades and tons of opportunities. But as soon as you take those big losses where it's now 10%, 15%, 20%, you just dig that hole that becomes, improbable to work yourself through. Okay, this is another piece here, calculating risk to reward. What this shows, if you see the screenshot here, this shows the risk to reward ratio compared to the win percent. So the lower your reward to risk ratio, the higher your win percent must be. So for an example, if you go after, let's say you risk $100, okay, you risk $100 and your win is $50. So that is a 0.5 reward to risk ratio, right? So you're willing to lose $100, but you're going to win $50. And if you did that regularly, a break-even level for you is you have to win about 2/3 of your trade, 67%. Now, most traders think of it like, well, what if I can win 50-50? What if I have a high win percentage? Well, that's great. If you have a super high win percentage, you can make money, okay? But if you let those losses get too big, if you let that reward to risk ratio not be in your favor, then it's harder and harder to make money. So the sweet spot is really that kind of 50% win rate with anything above a 1-to-1 break even, right? Or 1-to-1 reward to risk. So I try to emphasize like 2-to-1 is fantastic, 3-to-1 is fantastic. It also depends on the markets. In Forex, a lot of trades I'll take in Forex, I love going after 2-to-1 setups. 1.5-to-1 might be very, very simple at times. 2-to-1 is great. 3-to-1 is even better. And the surprise would be that we just have this thing planned and it's a big open space and we have like this amazing entry where it's maybe a 5-to-1. Maybe we get super lucky beyond that. In stocks, I think you have the ability to run a lot longer. In stocks, you can buy something, and I mean, last year was a good example. 2020, there were stocks that were virtually no risk after March and April, and everything was going 50, 60, 100, 200, 300%. It was insane. Now, is trading the stock market always going to be like that? Absolutely not. But man, was it a prime environment for just a ton of dollars to be made out there for any trader investor, even if you knew nothing about the markets. Okay? But I think stocks have a better chance to run. Cryptocurrencies right now is the Wild West, but we're giving them a chance to run. I was fortunate that I was still following the technical analysis of cryptos back in 2017 and 18. I didn't buy into the hype in 2018. I waited very patiently into 2019 and saw them come down to levels that I was very attracted to. So, my Bitcoin levels are around $4,000. My Ethereum levels are around $200. My Ripple levels are at 17 cents. I mean, you can look at this right now as you're watching this video. I don't care if this is, now or 5 years from now. Hopefully 5 years from now, Bitcoin's at $1 million and I'm talking about buying it at $4,000, right? Good for me. But traders had a chance. 2019, there was a chance to get into these great levels. Even right now, there is, speculation that we're going to see these massive upward movements. So having the risk out there of like, okay, if Bitcoin went from 40,000 down to 0, that is calculated risk. But if we're at 40,000 that goes to $1 million, that is an incredible amount of upside potential. And that's what we're doing. That's what we're trading for, right? That's what we want. So I just want to show that like the sweet spot is really the risk reward of, 2-to-1 reward to risk is fantastic, but it depends on the market. If I'm a Forex trader, 2-to-1 is amazing because it is definitely a way more efficient trader's market. In stocks, it's all about low downside and just as much upside as you can grab. That's my thoughts on stocks. Like let it run, use trailing stop losses, let that market run. Okay. Tools and final thoughts. I know, like I said, I was going to give 15 minutes. It's been about 19. So 15 minutes, but look, how's the video? If you like the video, make sure you give me a thumbs up. Leave me some comments. Like I said, I've done this video in the past with other subjects and other kind of thoughts in my head and just kind of ranted for an hour. This to me is like a much more concentrated dose. If you want to see more of this stuff, if you want me to do more and dive deeper into the, the psychology, that's fine. Actually, I mean, my brother is a licensed psychologist and, played basketballs, worked with athletes, worked with elite performers. And I've had many of conversations about trading, just performance-based stuff. It's not trading, right? It's a high level of performance. And to get to this level, you have to be in the top 20%, the top 10%. And so, yes, naturally the markets will, take their prisoners, and there is no mercy. But to rise to the top, it's really a simple thing. Protect that bottom line and trade to be profitable. It's going to be a journey. There's going to be trials and errors, but the best thing you can do for yourself is to trade small, be conservative, and have expectations that are realistic. I mean, nowadays when I'm trading, I essentially have no expectations. I am not looking to force trades every single day. In fact, that was really where I started to go away from how I learned how to trade. My first strategy was I knew that I was going to place trades every single day. And it wasn't bad when I'm winning, right? I loved it when I was winning. But when you start to incur a couple of losing days in a row and you start to get a losing streak, and again, that's totally normal, but it will mess with your psychology. So, how about this? For the sake of time, I'm going to cut off this one. This is going to be Trading Mindset, Trading Psychology Part 1. Come back for my second video. And that second video, I'll be going through a profit calculator, a compound calculator, and I'm going to go through some of my live trades. Okay, so see you in video 2. Thanks for being with me in Keep It Seriously Simple. Video 1, this is going to be Lesson 13 with Trading Psychology. Talk to you soon, everybody. Bye.